Welcome back to FundaTech Insights, the only finance podcast where the caffeine is strong and the opinions are even stronger. Today we're diving into Zscaler, ticker ZS, a hot name in cloud cybersecurity. And with me is our resident analyst, Maddie. Hi, Maddie.
Hey, glad to be here. I brought charts, earnings notes, and an unhealthy excitement about zero trust security.
We love enthusiasm. So kick us off. What even is Zscaler for listeners who think cybersecurity just means clearing their browser history?
Great place to start. Zscaler, ticker ZS, is a leading cloud cybersecurity company. They operate in the tech sector and focus on zero trust architecture, basically making sure users and apps only connect if they can truly be trusted. Think of it as a bouncer for corporate networks, except less leather jacket and more encryption.
So like a nightclub with fewer questionable decisions?
Exactly, unless you count enterprise VPNs.
All right, let's talk stock price before my attention span expires. How's it been performing?
Recently, the stock closed around the high $280, though after hours trading dipped into the $270 range after earnings. Market cap sits in the mid $40 billion area, trading volume was heavier than usual, and average volume is sitting around that 1 to 2 million share level.
So basically, still expensive enough that I need to check my bank account before buying a single share.
Same. I tried once and my brokerage app laughed at me.
Speaking of laughter, what's the latest news that's moving this thing?
The big catalyst was their latest earnings. Revenue came in around $788 million, up roughly 26% year over year. Adjusted EPS was about 96 cents, also up around 25%. They even guided next quarter slightly higher with revenue near $798 million. Yet the stock still dipped after hours because Wall Street reacts to good news the same way cats react to cucumbers.
Interesting. Give us the financial health. Are they profitable or just tech profitable, meaning not at all, but with enthusiasm?
Amazing question. They're improving, but still historically GAAP unprofitable while scaling. They've crossed $3 billion in ARR and are pushing toward better operating leverage. Growth outlook remains mid 20% range. Investors are watching billings and retention metrics closely.
Interrupting. So, translation, they're growing fast, spending fast, and everyone is okay with it as long as the numbers keep going up?
You understood that too quickly. I'm proud and concerned.
Technicals. The chart people are already tweeting angrily that we haven't covered it yet.
Technically speaking, the stock pulled back after earnings. Support sits roughly in the 250 to 270 area, with resistance in the 300 to 330 range. The 50-day average is hovering near the current price action, while the 200-day sits well below, meaning the longer-term uptrend is intact.
So, buy the dip?
I did not say that. My lawyer would like me to repeat. I did not say that.
Analysts, are they in love with this thing or just casually dating it?
Mostly in love. Consensus leans buy or outperform, with average price targets around the low to mid $300. Some analysts cheer the strong growth and AI positioning. Others warn valuation is rich and expectations are already high.
So, like when someone says they're chill but owns 3 planners and color codes their calendar?
That hits too close to home.
Retail sentiment. Are Redditors planning a short squeeze or too busy arguing about crypto again?
Short interest is around 4 to 5% of the float. Not enough for a meme-style squeeze, but enough to fuel volatility. Retail chatter exists, especially among cybersecurity fans and growth stock diehards, but no media mania.
Shame. I was hoping for another cinematic universe.
One Jimmy Fallon segment away, probably.
All right, so bottom line, give us the elevator pitch without actually trapping us in an elevator.
Bull case. Zscaler is the top pure-play zero-trust cloud security provider, growing fast, expanding with AI, and analysts love it. Bear case. Valuation is rich, any slowdown could hit hard, and post-earnings volatility proves expectations are high.
Sounds like dating someone attractive with emotional availability issues.
Wall Street in a nutshell.
Maddie, this was fantastic. I learned about Zscaler, cyber bouncers, cat cucumber reactions, and that you might need a therapist for your color coding habits.
I'll expense it as research.
All right. That's all for today's episode of FundaTech Insights. Remember, folks, this isn't financial advice, just mildly entertaining market therapy. Catch us in the next episode when Maddie explains about next stock. Till then, take care of yourself, bye-bye, and keep investing.